Wall Street is gonna suck you dry. So if you're one of those traders that still is not profitable, you tried everything out there, maybe 2 years in, 3 years in, and you're just like navigating between red and break even and small green, then this video is for you. I just came back from Wall Street. I had 3 days live event there with some amazing traders, and we actually traded live with our broker over there. And then we had an event also at the New York Stock Exchange. We were there for the closing bell. It was pretty cool. I've seen market makers. I actually saw their charts and don't expect to see anything fancy. They had bar charts, not even candlesticks. And I was formed also with bar charts like more than 20 years ago when I was trading Italian stock market. And they had MACD, yes, RSI, and few moving averages. So nothing really like, would expect super algos or whatever. But I want to tell you also that I spoke with a lot of retail traders. They're in New York. I was in Miami. I was in Denver. We had another live event last month. And a lot of the retail traders who I spoke with, they always have this problem that they generally like trade, but it seems like the market always like anticipates them or knows what they will trade. Because actually market is using right now, the smart money, the big hands are using algorithms that they learn our behavior. So they know where we will put a stop loss. They know where we will enter the market. They know when we will like looking to trail. And they're going to do everything in order to trap us and actually rob the money from our pockets. So in this video, my first thing is to explain you really the Wall Street smart money versus the retail traders. So the second thing I want to explain to you is really the mentality of a Wall Street trader. So how you have to become. And then I'm going to explain you one major long pattern that is not a pattern that I'm just simply going to share like that just to have like some videos, views. No, it's a pattern that I've been trading for the last 7 years that a lot of 6 and 7 figure traders in my room are using actually every day. So when you join, you can simply see me trading, share my broker bars and everything. And then you can see also the traders who are in the room actually taking the same setup. This setup is like game changing. And then the fourth one for the short sellers, another short setup. I want to also invite you, if you want to learn something more advanced concepts, but also beginner concepts, so we put everything together in what I call the Bootcamp Trading Accelerator. So it's like 100 minutes, and in 100 minutes, you're going to simply learn everything, but about niche, about the market. So for example, what's the best way to save on commissions or on fees when you trade, how to recycle, back testing, and stuff like this. For this, click in the link below. Another thing, 2 to 6 of December, we're gonna hold a seminar over here in Italy, actually in the Republic of San Marino. It's gonna be limited seats, and I'm gonna be trading live with the broker, so you can sit next to me over here. Like almost every week, I have traders over here at the Academy coming from all over. So you can sit here, trade with me. We're gonna do lesson, risk management. You're gonna learn the process, and I'm gonna also explain you how to backtest the market in order that you can find strategies which have 70, 75, 80% win rate in the last season. Okay, enjoy the video and also give me some feedback. Thank you. The first point I want to talk about is the Wall Street smart money, or what we call also the big hands, versus the retail traders. So smart money, first of all, has a very, we say, predefined way to trade based on algorithms and hard stop losses. So when they have a hard stop loss, they execute. Retail traders, what is driven by emotions because we're human, right? So even if you have like a defined system with rules, pretty systematic, you follow your pattern, still sometimes you'll have like ego, like interfering with your trading, emotions driving your trading in the sense that maybe you will give more little wiggle room to your stop loss, or you will anticipate a little bit, or you will let your we say losses run too much, or you will cut your wins before having a target. Well, smart money doesn't do this. Smart money actually tracks, so back test all the patterns, all the situation, all the scenarios that we have in the market. Also studies how the human, so the retail trader trades, and then they form, I would say, a strategy really against us. Their goal is to have an edge based on statistical play. And how many of you traders can really say and state that you're using statistics in order to trade against the market. Not many. So I found that only between 35 and 40% of the traders that I spoke to, and we're talking about 1,000 traders, they're using statistics in their trading. Algorithms that we have right now are so smart because they also have an adaptation mode. So they can adapt, improve, and now with the AI, they can actually learn. So imagine that we're fighting against this kind of intelligence. And that's the reason why retail traders have to be so much more prepared versus what were, the retail traders of the 80s, the 90s, where you could simply trade a breakout trade. How many times now you trade a breakout trade and it's a fake out? It's a liquidity trap. That's what the smart money wants. So we have over here Jtrader. Jtrader is the app that we built. And I've put over here Tesla. Tesla these days is really active. We have a lot of volatility. And over here, I simply wanted to back test what Tesla performed, how Tesla performed in the last 3 years with at least 5% gap. So something like I'm expecting today, and at least 1 million volume traded. It's the minimum really volume 1 million. I can put even 100 million plus. But the stat is over here pretty clear. So we have 69%. So on 16 gaps, 11 had a close strong on the day. So that means that the average of the day was around 12:30. So between, let's say, 12 and 1 p.m. We had an average extension of 3% from the open. So from the open, it's still extended at 3%. And 69%, so 11 out of 16 closed green of the day. And that's the edge that I'm talking to you about, how to trade like a Wall Street trader. So putting really the statistic in your trading game. The second thing is about execution, because without execution, without fast speed of execution, without the great broker, we cannot actually do this. So have the right broker, having also a broker that gives you proprietary tools like Jtrader Pro, for example, or Sterling, all right? So that you actually you're super fast, you have quality fills, you have very low slippage that allows you, not really to trade like a big hedge fund that probably they have if you have trading, they have $1 million computers, right? But still you're able to trade at a very great level versus other retail traders. And then what I would like you to do is to keep a spreadsheet. So something that it tells you, for example, the stock that you're interested in, or a group of stock that have the same parameters, the same, for example, flow, the same news, the same percentage of gap, how they perform, so that you can find that edge, that niche to trade. This is, for example, an example of that spreadsheet. This is from a trader engineer in our trading room. So the trader mainly trades Tesla and backtest Tesla every single month, every single year. So knows exactly the pattern for how much the pattern will work, long and short, the average stop loss, the average target, the different scenario, gap up, gap down, uptrending, downtrending. So this is the way that I invite you to really trade the market. And this is exactly what we share in the room. So this kind of, I would say, data. This is something that I want to give you. And it's something that you can actually use to turn your trading. And you can make a consistent income and build your account even 20% in a week. Because I have traders that are actually doing that. This is my on the over. So you can use this in small caps, mid caps. But today we're going to talk about large caps. The long pattern consists in this. First, traders, you need to have a gap up and a strong stock. The strong stock, second thing, has to have a good, strong catalyst. Also, high over here, relative volume. So has to be an increase of volume versus the previous days. And then at the open, I want to see what I call down the over, which on the over is exactly this. So we start over here. We're having like a wash. We find a dip. Generally, this dip is going to be near an important level of pre-market. And I tell you, generally it's going to be into one of the band of the J lines. And then over here, you want to see like buyers stepping in. So you want to see like momentum increasing. And I want to long into this area. So not really on the breakout, because often if I enter long over here, from here to here, which is where I'm going to stop, is too much range. I want to enter over here having this kind of stop. And now we're going to analyze some setups that we have traded these weeks. For example, this is, you can see, is DJT. So DJT over here had a major gap up. At the gate, we had this 5 minutes. So this bar, okay, if we dissect it, this is a 5-minute bar. If we put it on the 1 minute, you will actually see this. Comes back up, and you have this push. So you can see that the dip over here is into this pre-market J lines. And once over here we start like curling back up, I want to start taking the long play over here. So this area over here, we can add even more following momentum and then push the upside. And what I need, again, remember, first thing, gap up, strong catalyst, high relative volume, and then I want to see a morning dip. Same thing over here on the PLTR, so always on the over example. We had over here earnings, so strong catalyst, high relative volume. Actually, just look over here visually, right? This is the volume that we had, for example, 2 days ago. This is the volume that we had the previous day, and this is the volume that we had the day of the earnings. So we are gap up, news, earnings. We have a morning dip, and again, you can see that we simply wash again into the band of the J lines, and refer to the video that I made on YouTube explaining how to set these J lines. Okay, so this is free content. And then once we start like, we dissect it. Once we start curling back up, this is where I want to long, setting my stop loss over here, and then taking this major long position. So this is really like money, I would say free money, because it's a setup we trade with 70% plus win rate. It's a setup that we've been trading in the last 7 years. We always have this setup on earnings, on strong news, catalyst, even during COVID, or when we have, for example, a big contract agreement or a phase 3, I would say primary endpoint met, or an FDA approval. So once this setup, you can track it, and then you can also join the room, because you will see me trading this every single day, also member trading this, and you're going to simply learn how to read the tape, how to read the flow, and how to really follow this process while the market is open. The second setup is another money maker. It's a setup that I can even tell you it's easy to backtest if you have like a stock that you actually love or trade mostly. For example, could be Tesla, right? You have to look for these 4 parameters. First of all, you want to see a stock that is below the previous trading range. And then you want to see a stock that is below the pre-market range, so the second parameter. You want to see a stock that has a big selling pressure, and this you'll see it from big red volume bars on the volume. And then you're looking for a 4 parameter, which is a pullback into the VWAP. So when I have the VWAP, in this case, you can see this red line, okay? This is my VWAP, this one over here. When I see the VWAP, that actually is, the price is stalling to the VWAP, but it's not only a VWAP, but it's also a level of confluence with a key technical level. In this case, you can see also over here the pre-market low. Then this point over here, the VWAP, becomes a very good point where I can enter the trade, set my risk just above the VWAP, and then looking simply to take the trade. And how I trail it? Well, generally, if I'm risking 1, I'm looking for 3R plus, and then I will simply trail with a 9 EMA. This setup works on so many stocks. It works very good on mid caps, small caps, and large caps. So remember, always you want to see the price below or at the previous day low, okay? So below the previous trading range. You want to see a big selling pressure. You want to see a pullback into the VWAP, and that VWAP has to be in confluence with a key level. Key level could be a daily resistance, could be a pre-market low, could be a previous day close, previous day low, could be a pivot, all right? Could be maybe an S1 or S2 or a pivot. So you have that confluence and you can enter really with low risk. And if you want more, click the link in the description to receive the free guide Bootcamp Accelerator. Or come from the 2nd to the 6th to the Day Trading Academy over here in Italy, where you can sit next to me, trade, enjoy roundtables with other traders, having fun together, but also, putting like 6-8 hours of work every single day, courses, mastering over here your mind. So we'll do like some mindfulness exercises and then simply dive in the live market and trading together. Good luck, traders.